Hey, welcome to another video and thanks for clicking on this one. In this video, I want to share with you what I saw in the market last week. And last week, I only made one video, and that's because I've been working, but it is important to set something straight. A lot of times, I would only make videos when I feel like there's a change to some of the things that I am seeing and what I feel like is going to happen, and that's when I share my opinion. I'm not a full-time content creator, but this is something that I enjoy doing, sharing my knowledge and sharing what I am doing as well. So if you're new here, welcome. If you're somebody who has subscribed to the channel, thanks for subscribing to the channel. So one thing I want to say, last week was nothing new. We've been seeing the stock market do its thing for the past couple of months now. We've been making new highs almost every week, even though the week started off a little bit rough, especially on Wednesday. I believe we saw a slight dip, but then we made a quick recovery by Thursday. Why did that happen on Wednesday? Well, the Feds announced their decision, and the stock market didn't really know how to take that information and or what to do with it. But by Thursday and Friday, the stock market returned to its bullish trend. Now, the question is this going to continue into next week, or this week we're about to start, the week of 22nd? The truth is, we don't know exactly what the future holds, but there's always room for the market to go higher. One thing to understand is that we are seeing a lot of analysts come out to share that the impact of tariff may not be as drastic or as evident in the near term. And that is important to mention because if the tariff situation doesn't really spike the inflation rate as much as they're expecting, that will be a very strong bullish indication for the market, especially for the tech stocks to go higher. Now, we know that some of the issues that we may be seeing right now also sit around NVIDIA, being that the Chinese market is banning NVIDIA, or actually they banned it according to the information out there, unless something changes. And this is not a good thing for NVIDIA. This is not a good thing for the tech stocks at all, but specifically for NVIDIA. And we know NVIDIA is one of the heavyweights out there that is pulling the market. So we'll see how that plays out this coming week. Now, one thing I would share is that a lot of times when I talk about this, I'm talking about the general market. I often don't talk about specific stocks, but I want to share one stock that I think is important to consider if you're somebody who likes dividends and you like stable, reliable companies. That company is Coca-Cola, or KO is the ticker symbol. That is something that you might want to check out and look at it. The stock has gone down from its recent highs, and that is because, well, what happens in the stock market is that when there's a lot of fear and worry, a lot of the tech volatile stocks are sold off and money is often moved into cash positions, money market accounts, and bonds, and of course, dividend paying stocks. The reason why dividend paying stocks can be very good, of course, is the fact that they pay dividends, especially when you have companies like Coca-Cola, AT&T, Procter & Gamble, and the likes. And these are the stocks that would often suffer when the stock market goes higher. If you noticed, if you watch the market regularly, you would notice that on the days that the stock market goes higher, especially with the tech stocks that move much faster, you wouldn't see that type of movement in dividend paying stocks. They may go higher, or sometimes they might actually go lower. And that's because money often rotates around depending on what is going on and depending on how investors feel. Now, I personally like the idea of investing and diversifying. I have some tech stocks, I have some mutual funds, index funds, ETFs, single stocks, and majority of my investments are often in index funds and mutual funds, and of course followed by ETFs. And then I have some individual company stocks like Apple, NVIDIA, Microsoft, and the likes. Now, dividend paying stocks are a place to also put money into. Why? Because this is something that you can build over time, especially towards, say, retirement, or if it's not just for retirement, even for cash to have. Now, I don't take any of the money that I get from dividends at this time because I reinvest it into the stock. But that is something that you can do depending on what you have going on. You can easily have that money sent to you as a check. You can easily have that money sent to you to go into your brokerage account and choose to do whatever you want with it. The reason why I'm bringing Coca-Cola to you is this is a company that has existed for a long time. They've paid dividends on a regular basis and they are doing well. Coca-Cola is not going anywhere. And with that information, that means that they are likely to be here for a very long time paying dividends. And that is something that we all want. We want something that pays us, especially passive income. With that said, if you want to get it, it's also good to count on the price appreciation of this type of stocks, because it's good to buy it at $50 and it goes up to $70, right? That's always nice. And that's why I'm recommending Coca-Cola at this time. Of course, this is not financial advice. Do your own due diligence, do your own research and the likes. But something to keep in mind is that dividend paying stocks can really be good for your portfolio, especially when you have a lot of fear and a lot of sell-off in the market. Dividend paying stocks are often doing okay or somewhat stable. They will not go up drastically, but at the same time, you won't see them fall drastically. So personally, I'm going to buy more Coca-Cola at this time because I feel like I want to increase my share of Coca-Cola. Now, if you like even more dividend paying stocks that you want to hold, why don't you consider things like the SCHD, or SHD, and that is the dividend paying ETF from Schwab. And this is one that a lot of people talk about. You know, if you like dividends and you want to have your money diversified, you may consider the SCHD ETF. But again, if you like Coca-Cola, this is one to definitely watch. At last time I checked, it was selling at around $66. It could, of course, turn around, but again, this is not something that moves quickly. It's a very slow-moving vehicle, if you think about it that way, but it consistently pays you income, and that income can be very good if built for a very long time. Imagine you're buying 1 share per month, right? Or you're buying 2 shares per month or 3 shares per month. In the next 5-10 years, what you'll be getting in dividends will be will be decent, and that is something that you want to keep your mind on when it comes to dividend paying stocks. You want to look at the long-term value of what you would get as dividends. Now, the question is, would you have made more money in a growth stock, for example? Probably. You might have made more money in terms of the price appreciation of the stock, but with dividend paying stocks, you're not really fighting for price appreciation, but more for the dividends. And that's what I like to do. I like to, you know, they always say that it's best to have money at hand, right? And that's the idea of dividends. It pays you something that you can use towards, whether it's a deal, whether it's for buying more shares, or whether it's just for whatever you choose. So that's something to consider. And of course, you know, SHD, like I mentioned. Again, if you found value in this one, if you have enjoyed something like this, if you like this type of videos, please don't forget to subscribe to the channel. It goes a long way. I thought to share my own knowledge, my experience, and what I'm doing as well in this video, and I'll see you in the future one.